welcome to the webinar today. Thank you. Good to see everyone, including some people I haven't seen in a very long time. It's really an excellent forum to reconnect. I'm really excited about the discussion we're going to be having today. My name is Dr. Frida Njogu. I am the East and Southern Africa Regional Director here at IDinsight. And maybe for those who don't know, IDinsight is a global advisory, data analytics, and research organization that really works to support development leaders maximize their social impact. So we do this by tailoring a wide range of data and evidence tools, including randomized evaluation, machine learning, analytics, and so on, to help them design effective programs and rigorously test what works to support communities. Eventually, really, we are looking at what data and evidence needs they have, and then we go ahead and work to provide that. So we work with governments, NGOs, funders, and others, and we work in Asia and Africa, and really work across a wide range of sectors in the social space. Yeah, that's really briefly about IDinsight. We are going to be doing a deep dive today into taxation policies and tax administration in Africa, and we'll get to hear, from various sectoral experts on what tax equity really is, and what it look like in our context. So I'm really looking forward to a very interesting discussion. And so I'd like to welcome Professor Amos Njuguna, who's the chair of NERA. He's also the Dean, School of Graduate Studies, Research and Extension at USIU, to take over from here. Karibu, Professor.
Thank you, Frida, for the introduction. I'll just provide a very brief overview of NERA, and then before we get into the topic of the day. The Network of Impact Evaluation Researchers in Africa is basically a network of scholars, people who have dedicated themselves to generating rigorous evidence that not only is implementable, but also can be used to shape policies, and that can actually be scaled to be able to give the impact that social and development programs need to take, especially in the low and middle income countries. So the network currently has about 30 members spread across East Africa, 6 countries in East Africa, and focuses on capacity building for rigorous research, generating evidence, and policy outreach. The network is really does a lot of demand-driven research initiatives, and it's good, Frida, to observe here that this network was inspired by one of the papers that was done by IDinsight. When we looked at the paper in 2018 that talked about decision-focused evaluation and saying that uptake of research findings can be enhanced if we started with the end in mind. And that's how the network came into force. And I'm so excited that today we are partnering with the IDinsight to be able to deliver this exciting topic and have a discussion across board. So I'll come back to moderate, but before then, maybe I will invite Vanessa to do her presentation on the topic as I pause, and then thereafter we'll get Alvin, and then I will invite the panelists later. So Vanessa, please feel free to introduce yourself and then continue and make the presentation. Thank you.
Thank you so much for the introduction. I will just try to share my screen now that I've realized it's possible. Now, can you see that? I might just try to space it a bit. How is it visible now?
Yes, it's visible.
Okay, perfect. Okay, so thank you, everyone. It's such a pleasure to be here with you today. Of course, it would be nice in person, but I hope to have the chance to meet you all in person one day. So my name is Vanessa Vanden Bogard. I'm a research fellow at the International Center for Tax and Development, which is based at the Institute of Development Studies in the UK, as well as at the University of Toronto in Canada, which is where I am normally based and currently joining you from Freetown. So today, to kick off the discussion, I wanted to draw attention to an important issue in thinking about the overall equity of tax systems, particularly in context of high informality. So this is obviously relevant in Sub-Saharan Africa, where on average, more than 80% of the labor force is informal. So when we think about taxation in these contexts, there's long been this common narrative that people aren't paying taxes, that because most people are working in the informal economy, they're evading taxes, they're not paying their fair share. And following from that is a common policy argument that expanding the tax net or taxing the informal economy will increase the fairness of the tax system. So there's long been policy enthusiasm for this idea and for this policy approach, which is grounded both in the idea that there's somehow this untapped revenue in the informal economy that the government should be taking advantage of, and in this idea that people aren't paying their fair share and they should be. Now, in reality, however, attempts to expand taxation to the informal economy often fail to either increase revenue or to increase equity of the tax system. Now, from a revenue efficiency perspective, I think our evidence shows that policy attempts to tax the informal economy often fail to appreciate just how administratively expensive and difficult and burdensome it can be to actually go out and register informal workers, but to not just do that, but to actually follow up with them after the fact to make sure that they actually pay tax when they're registered. So all of that comes with enormous costs. Sorry, there's a little bug. But from an equity perspective, we see that the policies in practice often focus attention, revenue authority attention on some of the poorest and most vulnerable communities. So registration drives, for instance, often target small and medium-sized enterprises and low-income earners in the informal economy. Now, this is for the simple fact that it's often easier to identify small businesses, or for instance, market traders or vendors, than it is to identify larger scale tax evasion by operators like large-scale manufacturers or professionals such as dentists or doctors or lawyers that may be operating from their own homes. Now, not only does this poor targeting of registration drives mean that newly registered businesses will often fall under national tax-paying threshold. So it means that governments aren't actually gaining much revenue from these new efforts to tax the informal economy, but it also really increases the unfairness of the tax system, primarily because it overlooks pre-existing fiscal burdens that often face those in the informal economy. So to dig into that a little bit, let's just go back to this key underlying assumption that businesses in the informal economy and people in households in low-income countries more generally don't pay tax. So there is this common idea, but it's really based on a narrow snapshot of data. So it is true that most people formally pay almost nothing in direct taxes to national governments and often pay little in the way of local taxes to subnational governments. But we know that relying on national level statistics alone leads us to overlook the ways in which individuals and businesses actually interact with tax systems and broader systems of local public finance in low-income countries. The reality is that many informal businesses already pay a significant range of taxes and fees. These can be things like business licenses or operating fees to local governments, or informal payments to police officers or to, let's say, gangs or area boys to operate in certain neighborhoods. Now, critically, thinking through the impact of these types of payments, businesses often get nothing in return other than, let's say, the avoidance of harassment. So if we think about the fiscal burdens that informal businesses already face, we can see that they're disconnected from notions of fairness, of fiscal reciprocity, or accountability. Now, in addition to some of these business-related payments, whether formal or informal, citizens more generally often face a heavy burden of informal payments and contributions to fund local public goods, to access essential services or to support local institutions of governance. These payments are what is referred to as informal taxation, payments that can be made in cash, in kind, or through labor to a range of state or non-state actors. These informal payments, a range of my own research as well as that of others shows that these payments often fill critical gaps in public financing and are really essential to contributing to basic services like schools or teacher salaries or water wells, road and bridge construction in local areas. So many of these are a result of a lack, many of the payments that we see are a result of a lack of a stronger system of taxation and redistribution at the national level. So really citizens are filling gaps left by weak state tax capacity and weak willingness or capacity to engage in greater redistribution. And existing evidence, I'll just go over this very briefly. There's a growing body of evidence in this field, but it all points to the fact that these types of payments are prevalent. So for example, in my own research in Sierra Leone, I find that only 4% of people reported paying any tax to the central government, in line with the assumption that most people aren't paying taxes to the national government, but about 70% of households reported paying an informal tax or fee over the same time period. I find similar results in other countries, including in South Central Somalia and in the DRC. So we know that these are more broadly prevalent. And understanding these informal burdens is really essential for understanding the overall equity of the tax system. So, critically, data, again, evidence from diverse contexts shows that informal taxes are regressive, with lower income groups paying more informal taxes and fees in relation to their income relative to higher income groups. And this reflects a simple fact that informal taxes or user fees at the local government level are often flat fees. So they have a heavier burden on lower income households or businesses. Now I've included just one example here from my research in Somalia, which simply shows that lower income households bear a disproportionately higher burden of informal contributions as a proportion of their income relative to higher income deciles. And similar patterns, again, are found in my research in the DRC and in Sierra Leone. Now, aside from the uneven individual distribution of informal taxes, I think it's also important to draw attention to the fact that where informal systems of public finance replace a more effective centralized system of taxation and redistribution, it has an unequal community level effects. So when the responsibility for financing public goods falls on individuals rather than on the state, access to public goods and the quality of the public goods available depends on the relative wealth of the community. So that really implies uneven distributional effects within countries as well as within subnational regions. It's intuitive to think, but it's often an overlooked fact that where there's no effective centralized system of redistribution, communities will have this unequal capacity to fill in gaps left by the state. So just to summarize some of the key points that I want to make today. So while observers and policymakers often assume that most people in low-income countries, and particularly low-income people and those working in the informal economy, don't pay taxes, we know that this doesn't tell the full story. So while people often don't pay much in formal taxes, they often face a heavy burden of informal taxation. And understanding these realities is important for at least 3 reasons. Not understanding these realities can lead us to misunderstand what's necessary for tax policy. So not including an assessment of user fees, of local user fees, of operating licenses and informal taxes in analyses of taxation in low-income countries will leave us with an incomplete picture of the tax burdens that people face, as well as an incomplete picture of the broader inequities that are embedded within formal and informal structures and institutions. So we really need to understand the real fiscal burdens that people face in order to understand how new tax policies or administrative reforms may contribute to that burden. And this is especially true for policies focused on taxing the informal economy. Introducing new taxes on informal workers may simply increase their existing burdens without necessarily improving public goods provision or providing reciprocal benefits. So this can increase the overall inequities in the system. Second, now if policymakers undertake new policies to introduce taxes on the informal economy without understanding the realities of what people are already facing, they may misunderstand why policies aren't as effective as they may expect. So as noted, taxing the informal economy often doesn't lead to the anticipated revenue gains. Now, policymakers may assume that these failures merely reflect insufficient enforcement or a lack of information on the part of taxpayers, and may thus increase pressures on informal workers to pay. But if we don't understand the pre-existing burdens and the context of service provision, we may understand the reasons why people don't want to pay new formal taxes. And finally, it's also really important to understand these realities in the institutional context of policy reforms, particularly in thinking about potential constituents that may be resistant to reform, whether that is overburdened taxpayers or informal taxing actors that may be reluctant to give up their role as taxing actors and the revenues that come with it. So just very briefly to suggest what may be done instead, and hopefully this can be part of a bigger conversation. But I think I'm going to highlight 3 key points here. First, rather than focusing on the informal economy, there's a much greater administrative effort could go towards taxing the wealthy. So we know that strategies exist for taxing high net worth individuals in context of weak tax administration. We know that it's possible. Of course, the reasons for not doing so, for not targeting the wealthy in any country, are primarily political, reflecting the fact that in some contexts, taxing the informal economy may be relatively easy to do in terms of the political economy incentives of doing so. But importantly, second, I think that's even as much as I try to say this again and again, policy enthusiasm for taxing the informal economy is probably not going to go away anytime soon. So at the very least, if governments and revenue administrations are undertaking policies to tax the informal economy, they should at least focus on better targeting of who they are targeting in the informal economy, not just trying to register small businesses or expanding a broad tax net through things like presumptive taxation, but instead really focusing in on large-scale operators, and again, focusing on professionals, which are often hidden from these policy registration drives. And finally, attention should be focused on service provision before introducing new taxes on the poor or on informal operators. Now, of course, there is a chicken and an egg problem. Governments need revenue in order to be able to finance services, but there's a growing body of research and evidence that at least suggests that we may be able to kickstart willingness to pay or people's ability to pay by first focusing on redistribution of revenues, whether those revenues come from taxing the wealthy or even from aid in the short term, to really demonstrate tangible service provision to people before increasing fiscal burdens on low income populations. So I'll leave it there for now, and hopefully that can help to start the discussion. We're really looking forward to everyone else's contributions here.
Prof, are you there? We are waiting for you, your guidance.
In business, and then we can add what
I'm not able to hear, Prof.
Sorry for that. Thank you very much for the presentation. I'll now invite Alvin to make the presentation before we start the other discussion. Thank you. Alvin? Alvin, I think you are on mute.
Can you hear me now?
Yes, we can.
Yes, yeah, thank you. Thank you very much, Prof, for the invitation, and also to Vanessa for, I think, a very insightful presentation, which I think has captured a big part of what I wanted to speak to. Should have shared notes before Vanessa, but I think that really the points you have raised are very topical, and as I'll be going through my slides, I probably might skip some slides because they might sound repetitive to the point that the great points that you made. I think in terms of providing a broader context, I think it's important to locate the question of COVID within this conversation in terms of what COVID really has brought to the fore. And this, in my sense, is really the important role of the state, or the important role of building capable states that are able to respond to such kind of calamities equally, such as COVID. And secondly, what we see happening is that as a result, particularly when you connect to the informal sector conversation, what we see is that the COVID crisis is an economic crisis that is going to push people further into poverty. The estimate being about 40 million Africans being pushed further into poverty. But this is happening at the same time as when the super rich in the continent, the high worth individuals are growing. Actually, it is estimated that the continent has the highest rate of growth in the high net worth individuals. So this conversation about creating an equitable taxation system must look both on how we lift we lift those that are falling into poverty, but at the same time, how do we capture and broaden the tax base to capture those high net worth individuals, which is largely, as Vanessa clearly pointed out, is a political conversation that we must have. But what is for sure is that the question on this rests on the kind of tax policy system that will be put in place, and the importance of taxation, not only from a revenue generation perspective, but also from an expenditure perspective, to be able to address this inequality. The whole conversation around the taxation of informal sector is really an interesting one, because for one, I think that many times there are attempts to apply kind of blanket policies on the taxation of the informal sector. Although, of course, the informal sector, according to ILO, accounts for, as Vanessa also gave these statistics, about 80%, 85% of the labor force in the continent. There is need to unpack the informal sector, because within the informal sector is a huge spectrum of actors, the professionals that fall into that, down to what in Kenya we call the mamambogas, which are the vegetable sellers on the street, the people that are operating, for example, in Kenya, the whole transport system, many of the people that operate in the real estate sector operate also within the informal sector. So when we talk of the informal sector, I think it's important to unpack that and have kind of policies that are targeted to the different sectors of the informal sector, so that we are not applying blanket policies that when it comes to the taxation of the informal sector. I think when we look at inequality more generally, I feel that as the antidote of creating a more equitable taxation system, there is really a trend we see that inequality is largely underestimated. When we look at, for example, the consumption surveys versus the income surveys, there's a more thrust to conduct income surveys, but the consumption patterns are largely underestimated. For example, when we make arguments about the impact of consumption taxes from a gender perspective, it becomes very, very difficult to get the correct data, because we don't have, like, governments across the continent don't collect consumption patterns on gender based. So you're able to see, if you're saying value added tax harms the poor, harms the women most, what are the consumption patterns of women? So one of the things that as Tax Justice Network Africa, we have been pushing for is really effort towards not only like disaggregated data on budgeting, but also disaggregated data on consumptions, and so that those policies, when you're introducing particular issues, particular taxes, including the consumption taxes, you're able to be more targeted. Secondly, we see like over generally property and overall assets are not included in that. What really results to a situation where like the analysis is then flawed when particularly you find that the wealthy and the rich have very creative ways of structuring their different incomes and structuring their different assets that makes it very, very difficult to estimate. The earnings of capital that is held offshore or earned offshore many a times falls through the gaps. Then we end up having to rely on exposés such as the Panama Papers or the Pandora Papers to be able actually to start estimating how much of the national wealth is being held offshore. So in general, I think even as we design policy instrument to capture a more equitable tax systems, what we need to do is really scratch below the surface in terms of the kind of statistics and analysis that which then inform the kind of policies that are being put in place. I think the conversation on the creation of an equitable tax system cannot only be seen from a domestic lens. It's really important that the tax system, as much as is seen as a taxation from a sovereignty perspective, what we notice that globally there's a consensus that tax has tentacles across regions. The issues of illicit financial flows and how those contribute to undermining progressive taxation at the national level. When you look at issues around transfer pricing and how the corporate multinational companies are able to structure their systems to minimize their taxation, that has a direct and a direct bearing on the contribution of direct taxes vis-a-vis indirect taxes. The estimates from the most recent estimates that put the total loss of 88 billion. These are according to UNCTAD in terms of the amount of revenues that countries are losing as a result of illicit financial flows. So if you look at generally statistics on the variance between statutory taxes and the effective taxes, there's a huge gap. There. While the average statutory corporate tax rate across the continent is about 25 to 30%, the effective tax rates go between 12 and even low, even to some extent zero, because again of the loopholes in the global tax system. So I think that the conversation on a creation of an equitable tax system really must have both a focus on domestic dimension, but also more importantly on the aspect of the global system that facilitate and enable or contribute to enabling tax abuse, that which ultimately then contribute to a less progressive tax system. This really includes issues around which I hope my colleague Ngina was more an expert in this, around issues around the double tax treaties and how those contribute to erosion of tax base, the issues around regional integration, which I think contributes to tax competition among countries, but also more importantly on state capacities, which I think Vanessa did mention too. So generally, I think what we see in terms of policy trends, there is really generally across the country, across the continent, effort to work towards what can be called a tax consensus, which is framed around the easy to collect taxes or the low-lying fruits. And this is really as a result of the one-size-fits-all we see being propagated by international financial institutions, which really try to promote reliance on consumption taxes, particularly VAT taxes, linking this to the idea that because of low capacities of many of the revenue authorities, when you talk of tax administration, that our tax administration have such a low capacity that they are not able to collect more complex taxes, and therefore they should be encouraged to collect low-lying fruits, which many times end up to be consumption taxes. Again, as a result of the trend of neoliberalization we have seen over the years, the high dependence on trade taxes, which traditionally had been a huge source of income for many of the countries, we have seen this dramatically reduce. And counter to that is an increase to value and excise taxes, which again tend to contribute to regressive taxation across the continent, and of course leading to also a stagnation of the direct taxes, which again can be connected to what I was saying earlier about the taxation of the corporate income tax and the abuse of the tax loopholes that then facilitate to a reduction or a stagnation of corporate income tax. So in summary, I think what this means is that sorry if you excuse me, so much that income and where that is generated is held offshore. As much as you have policies that try to capture domestic taxation, if we are not able to address the loopholes that are leading to the shifting of either profits or wealth into offshore, then you cannot have at the domestic level an equitable tax system. It does not matter how like what kind of creative ways you can be able to bring to tax the informal sector. If you are not addressing the kind of global aspect of it, I think we will not find the lasting solution. Secondly, really the narrow focus among policymakers on the easy to collect taxes, ignoring the broader income and wealth taxation, which is linked, of course, to a more political will conversation. And lastly, sorry, I'm trying to rush. So ultimately, just to summarize it all, I think that the work towards reforms in the national taxation system at the domestic level to ensure an inclusive and equitable and transparent tax system cannot be removed from the global conversation. Secondly, I think when you look at taxation, not just from a revenue collection perspective, but the social contract. When we talk of tax compliance, when we talk of willingness to pay taxes, there is need really to bring in the conversation of the additional roles that tax play, not just from a revenue perspective, but re-establishing the social contract between the state and the citizens, and that contributing to that social contract. The other point I think will be important is really the taxation of wealth and capital gains, which I think is key. And there are attempts. I know that ICTD, for example, did some analysis on the introduction of wealth taxation, of taxation of the high net worth individuals in Uganda. And I think these are experiments that can be replicated in other countries. But of course, the bigger question is, how do we break the political resistance to be able to reestablish the political will? The question of tax incentives, how this is contributing to a race to the bottom in terms of countries competing to attract investments, and thereby providing wide range of tax incentives that are really on one side eroding the tax base, but also contributing to even a more regressive taxation. And lastly, I think, of course, the informal sector. I think Vanessa did go into that, so I don't need to re-emphasize on that. But more important, and this is my last point, really the global dimension of taxation, to ensure that we are not only contributing towards a more transparent global financial system, but one which is more inclusive in terms of the decision making sure that everyone is on the table in terms of the design and of the global tax system. I'll stop there, Professor, and then hand over the mic back to you.
Thank you very much, Alvin. And we've also had a very good discussion from Vanessa. And now I will introduce my other two panelists, that is Toban to make his observations, and then Catherine, before then we come to the engagement in terms of Q&A. So Tolban, do you want to react to the conversation first? What are your initial thoughts with regard to the two presentations before I come to Catherine?
Yeah, thank you so much.
Sorry, looks like Catherine. Okay, yes, go on.
Perfect. Yeah, thank you so much for the opportunity. I think these are great initial. Just fix this here. Great initial observations to spur our conversation, and maybe just a couple of points that stood out to me. I think one that came out strongly from Alvin's presentation, and given his background at the Tax Justice Network Africa, that is to be expected, is that even thinking about domestic tax cannot be thought without thinking about topics of international taxation. You mentioned sort of the IFF, so definitely that is very important to think about. And then I think Vanessa, key point that stood out from you is sort of this drive towards taxing the informal sector is maybe a misguided one for several factors. One, the widening the tax net does not necessarily result in higher tax revenue, and also it's sort of like oftentimes not very promising from like a cost benefit in terms of analysis. And I think that sort of thinking about sort of like what can now be done, I think there were a couple of overarching points of alignment that I saw as well. One is sort of focusing on taxation of income, especially high net worth individuals, focusing on areas of wealth taxation. So one aspect that I would like to bring in here is sort of thinking about property taxation, which oftentimes is administered sort of at, not at the federal level, but really sort of at local levels, and therefore also has the opportunity to like really think and enable this fiscal contract that I think both Vanessa and also Alvin alluded to. So I think that would be a very interesting point to make. And I know that the ICTD has and is doing great work. Vanessa, you're in Freetown, so maybe there's an opportunity to share a little bit of that work as well. And then there's also this point around service delivery, which I think is a very important one, right? Because sort of taking this step back, I think Vanessa, you made this initially from like a pure economic perspective. Sort of the original thinking is that we basically need to provide more information, more sort of facilitation to like bring people into the tax net. But then that didn't seem to work. So there was thinking about what else is motivating sort of that decision to pay or not pay tax in sort of this informal sector of the economy. And therefore, there were thoughts around what types of services are actually of interest to incentivize formalization, and to which extent does the provision of these services then lead to increased formalization in whatever way that is defined, and also then as a result of that formalization to increase tax revenues. And I just want to point out like one study that sort of was done in a collaborative way. It's not the only work that has been done on this important area, that has been done by IGAP as part of this Netaketa initiative that looked exactly at this question of formalization and tax revenues, where basically they found that there is quite some heterogeneity in terms of what services can be of interest to actors in the informal economy, which definitely is not a homogeneous group, right? So there's, we also heard this, there's sort of the vegetable sellers on the street side, and then there's sort of very highly educated professionals, and we might both count them as part of the informal sector in this very wide definition. So there's different types of services that can incentivize actors in that informal economy to engage in formalization. That means registering a business or registering for some social services that they might now be eligible to. But at the same time, that study also found that none of the services provided actually led to increases in tax revenue. Again, making that point also that Vanessa sort of highlighted. So basically what's coming out of that for me is sort of thinking about where to focus when thinking about the informal sector. Where does it make sense to really emphasize efforts? And when doing so, is that then more a question of thinking about tax evasion and non-compliance rather than sort of widening the tax net. And then there's other point I made very early on, thinking about the role of property taxation. And then maybe a third point that is sort of based on some of our own scan of the literature that is out there is around the role of civil society. And maybe that's also a point that you would be really keen to sort of hear your perspective there, where we basically observed that the evidence of civil society organizations working on domestic topics of taxation is very underappreciated right now. There's very little research, but there's also very few examples of civil society organizations engaging in this area. So I think the International Budget Partnership did some scan of over 150 civil society organizations globally working on tax topics. And they found that only about half are engaging in domestic topics of taxation at all. And the question then becomes, why is that, right? And what are the linkages to other topics that were mentioned? I think Vanessa even hinted also at the political economy that goes in a lot of these considerations. So we'll be very keen to understand sort of what role can civil society play in that, in terms of aggregating these preferences, in terms of aggregating these demands also from the informal sector, and also forming coalitions that allow civil society actors then to like bring those demands basically to whatever representation that they're working on. So yeah, that's just a couple of observations, and then maybe handing it over back to Professor Njunge.
Thank you very much for the insights. Before I allow Vanessa to possibly give one-line response, let me come to Catherine to say, possibly Catherine, what struck you most with regard to these two presentations?
So a couple of things. So first, it's as Tobin mentioned, every time we normally look at informality, I think we tend to think of the mamambogas, the people on the streets, as opposed to also the lawyer who's working from their house and refuses to register, or the tenderpreneur who supplies tenders but doesn't register for taxes. So as Tobin was saying, the continuum is quite wide, and in that sense, there are some people who can be brought into the tax bracket. Then, of course, there's also the interesting aspect that Vanessa pointed out, which I think it tends to be ignored. Well, I don't know whether or not it's ignored. It's just that we need to raise taxes. But that the assumption is always that the informal sector doesn't pay taxes. But they do. They actually do. If I give the example of the East African countries, quite a number of them are very heavy on the indirect taxes. So there's a lot of excise taxes, there's a lot of VAT, and especially for excise, we've introduced it in very, very essential services that are important for the informal sector. So we introduced it, say, on mobile money transfers, we've introduced it on airtime. So in that sense, we have made it very punitive for the informal sector as it is. So then trying to add on the direct taxes will not be very fair on them. Then I think there's the issue of taxing the rich. It is of great importance, I agree, and Uganda has tried to do it. I think sometimes we forget the little wins that we get. And yes, trying to tax the rich is politically sensitive, for the lack of a better word. It gets very, very difficult to tax the rich. But I'll give you an example. When the new constitution was passed in Kenya in 2010, although I think we should stop calling it new, it's now about 11 years old. 11. Yes, it's 11 years old. It's not new anymore. It's almost a teenager. The members of parliament never used to pay taxes. They only used to pay tax on their base salary, which I think was about 200,000 shillings. Then all their allowances were tax-free because they had passed a certain law that said they could, that their income was not taxable. But the new constitution came in and said that all the income that you earn, you cannot be exempted by virtue of the position that you hold. That means that for the first time, the president, the deputy, the members of parliament, and I think, was it the commander-in-chief? I forget, who are all exempt from taxes now had to pay taxes. Of course, at the time, there was a lot of fighting, and we ended up, members of parliament ended up increasing their salary to cover for the tax difference. That said, the mere fact that members of parliament were now finally being seen to pay taxes did something to the Kenyan psyche, because now people could look and now we could see the rich are now finally paying taxes. It's not just us. And the politics is not simply limited at the domestic level. It also tends to extend also to the diplomatic levels. So there was a very interesting case that I think was finally resolved this year, where an American institution was operating in Kenya. And for some very, very, very strange reason, they believed that their employees should not pay taxes in Kenya. They believed that their employees who are American should not pay taxes in Kenya. And I think the Revenue Authority just let it go for a while. Then one day someone just brought it up. And it caused a huge fight. There was a very, very huge diplomatic fight about it. Eventually, State House had to get involved. But the good thing, this is the one time when I will say the government did a good thing. They actually put their foot down and said, we have to go with what the law says. So your people are supposed to pay taxes. But in the meantime, the American government had used all its pulling power. And I didn't understand why, because it's not as if the employees were not American government employees. It was actually a private institution. So it was very interesting seeing how the politics does impact the rich, but not necessarily at the level that you would imagine. It is even a much higher level than the domestic level. Then, of course, there's also the issue of, if you're going to look at tax equity, as Alvin said, you cannot simply look at it purely from the domestic level. Tax equity must be seen at all levels, at the international level. If, for example, all our money is being moved through tax loopholes, for example, because of horrible treaties that we have signed. So maybe say, if we sign a treaty with the Netherlands and all the money is shifted to the Netherlands, then what's the tax equity there? Is it fair that the money ends up in the Netherlands and they get to tax it and we don't? And if we're saying it's not fair, then what can we possibly do about it? Because right now there are all these conversations that are currently going on BEPS and what have you, but some of those conversations are being had at such a high level that a lot of the low and middle income countries are not really being involved, but they're being involved at the very, very last minute, sort of like to make it seem as if they are part of the process. So like, for example, when they were coming up with solutions to the tax treaty problem, they came up with a document that was supposed to have been written by, it's called MC BEPS, you don't even need to know what it's called. But they came up with a document that was supposed to have been an agreement amongst all the different countries on how they're going to amend their tax treaties. But the truth is that a very large part of it had already been done by the time the low and middle income countries were being brought in. We're grateful that they were brought in, but the mere fact that we're normally brought in at the very end makes it a bit unfair. And of course, this is why we have the UN. The UN now is, its voice is getting a bit louder to at least counter a bit the OECD position, which is mainly for the rich. So if you're going to look at tax equity, you must look at it from all aspects, so that you're not simply looking at it from the domestic. Because if you look at it from the domestic and all the income that is supposed to have been paid, to have been taxed in Kenya is shifted to a high income country, then you will still have a lot of tax injustice. It will not be fair because the multinationals or whoever is wealthy enough to move their income will do so. Then if you're going to tax the informal sector, I mean, there are very many arguments why you shouldn't, and I think they've already been mentioned. It's administratively difficult, they're already overburdened, but there's also the other side where they talk about you should tax the informal sector, not necessarily much, but you should also make them aware that they are paying taxes so that they can also know that they can demand things from the government. You see, the person who is hawking on the streets thinks that they cannot demand anything from the government because they don't think that they pay taxes. But if they know that they pay taxes, then they can demand for things. I think most of us have at least watched one American movie or one American show where one of the things that people will always say is, I know my rights, I pay my taxes. And it sort of seems as if it is a it's a point of such great importance that the mere fact I pay my taxes means that I am entitled to certain things. So the fact that if you are to educate this informal sector and let them know that you actually already pay your taxes, then they can demand for much more from the government, that they can demand for better services, they can demand to not be, I don't know, thrown out or to constantly be chased with their goods in the evening, because they can stand their ground and say, I pay my taxes. But because they're made to almost believe that the mere fact that they don't pay income tax, that they don't pay taxes, they think that they cannot demand for the services that are due to them. And I think lastly, the only thing that I will say is that most of the times we assume that that there are no policies, or that our policies tend to be largely misinformed. I have had the pleasure or maybe sometimes displeasure of working and talking with the people who normally come up with the policies. A lot of it is, there are policies in Kenya. In fact, everyone keeps saying that if you want great policies and great legislation, come to Kenya, you will find it. The problem is never the policies. The problem is the application, and that tends to go out of the window when Treasury is given a huge target and they have a huge hole to plug when there's no money. So anything about policies tends to go out of the window, and I find that is the case with most African countries. They have needs. It's sort of like a parent who has many children and no money. You do what you have to do to survive. It's a terrible way of running the country. It's a terrible way of implementing taxes, but that is the current problem that we're dealing with.
Thank you, Catherine, for the insights. I'm just reading the chat, and you can see we have participants from South Africa. For example, a participant who is saying that in South Africa, they do have a small tax base relative to higher income countries, and they, of course, tax the wealthy individuals quite heavily. Okay, and before I come to the questions in the audience, of course, this issue is it's really difficult in the sense that the informal sector, if you say, the percentage or the relative amounts that that they pay as tax, yet they are the ones to whom most of the social benefits would ordinarily be directed to. And I know that, for example, in Kenya, Catherine, you may know, we've had this push of you enjoy government services, but you pay less tax. And it has been a whole tug of war to say, you are the one who gets the tax benefit. You are the one who gets the social benefit. And yet, you are the one who pays less tax. In the recent past, again, drawing from what Catherine said, we've seen government as a lot of, due to social pressure, and also legal, withdrawing a tax on the informal sector. And specifically, I'm referring to the turnover tax that was to be levied on guys in the informal sector. So the question then to any one of us would be, how can governments achieve their objectives and at the same time reduce the burden of inequity or the perception of inequity from the different perspectives across board? Because government must still survive. Those development projects must take place. Countries that are heavily laden by public debt must still pay their debts. But the question then is, where is the balance? How do they, what pragmatic or practical measures can governments take to ensure that they are getting money from taxation, and especially so from the informal sector that accounts for over 85% of the economically active population in low and middle income countries, while at the same time eliminating the perception of inequity? Anyone can go.
I think one of the ways in which it can be done. Sorry, Alvin, go.
Go first, Catherine. Go first.
Right. I do think that if we analyzed if we did look at the informal sector in the wide way in which I think it was Joshi, the paper was by Joshi and someone else. I don't remember who the other people were. I do remember Joshi was one of the writers. If we do look at it from that continuum, that informal is not just the small person, but also includes the entrepreneurs, it includes the professionals and all these people. If we can bring in those people, there's a certain level of people who are making a lot of money in this country and are not paying taxes, and they're not the poor. They're not poor. They may not be what you call necessarily the high net worth individuals, or maybe in some cases they are, but the amounts of money that they are making is shocking. It is very, very, very shocking. I sit on the tax appeals tribunal and I see some of the cases that come before us. There was one gentleman who was operating stores in Embu. Embu is a very small town, Tobin and Vanessa. It's a small town in Nairobi, like just very, in fact, that's the reason why you've never heard of it probably, because it's just small and nothing happens there. I think we grow rice there. But the bill that he had when he came before us, it was a 3 billion, he had a 3 billion shillings tax liability from running a business in Embu. And it hadn't even accumulated over a very, very long period of time because the time limit is 5 years. But he was guilty, and that was not his only case. He had about, I think, 3 different cases. And you have such people who are running such businesses, but they're not caught in the tax bracket because, first of all, they're just not registered, or they're affiliated to someone who's affiliated to someone who's affiliated to someone. But the main problem normally is that they're just not registered. So they operate in the informal sector, but they're not formal, but they're not really informal. So in that sense, if we can bring in that level of people, I think a very large part of our tax problems may be eased. Of course, you can always go after the the big fish, but that's much harder. It's much harder, for example, for us to say that the first family's business must pay taxes. I'm not saying that they don't pay taxes. I'm just saying it's harder to say we're going to audit the first family's business, for example, and what have you. But if you can catch these people who are just slightly below the very high net worth individuals, I think there are very many, and I think you would contribute greatly to the pot.
Thank you. Alvin, do you want to contribute to that? Then I pose the next question to Vanessa.
Yes. Thank you. I think for the Kenyans in the room, probably they will understand the joke. There is currently anywhere you go in the country and you're trying to have a good life, like now I'm in the beach, I'm constantly looking over my shoulder if there's a person from KRA there. It's like a running meme in the country because KRA announced that they will be doing, they'll be checking our Instagram to be able to see if the pictures that we are posting there are aligned to the declarations that we make. But I think this sends a very clear message. I think that efforts to bring transparency more broadly is a critical one from the banking sector, because as you know, Kenya and increasingly many other African countries, with the increased financialization, the reliance on mobile money and things like that, I think the ability to track, the example that Catherine, you have given, the ability to track the financial flows of actors like that is becoming more and more easy. And I think is really how much the government is investing in the kind of technology that will be able to make it difficult for you to be able to process that account of money without aligning that with the kind of tax declaration that we make. So I think that there are easy, I think, ways that including that investment. I remember in Kenya, for example, there were a time when it was mandatory. I think they did away with it again. It was mandatory that every time you're making your tax declaration, you also include the PIN number of your landlord. Wherever you're staying, you add who your landlord is. And then, of course, many of us, when we try to get those PIN numbers from our landlord, they said, if I'm giving you that PIN number, it means that your rent is going up by these margins. You make your choice if you want to have the PIN number or not. So I think that there have been efforts in different countries to try and see how do you actually use financial intelligence. And that also means investing in institutions, investing in oversight institutions, investing in the revenue authorities and other relevant institutions along the value chain that can be able to make it hard. I mean, I remember in a meeting I was a while back, a revenue officer from Uganda said, for anyone who's planning to avoid or evade paying tax, they ask themselves 3 questions. Will I get caught? If I get caught, will I get punished? If I get punished, how high is the punishment? And the answers to these questions determine on your willingness to declare your incomes, to provide the relevant information. That's, I think, one tool, I think, to answer your question, Professor, on this. The second is really the incentivizing formalization. I think this is really, really important, so that you're using a carrot and stick. How do we incentivize formalization? So you are not telling people, we are encouraging you to formalize so that you're able to pay your taxes, but we are encouraging you to formalize because you can access government contracts. We are encouraging you to formalize because we are encouraging cheap loans for your businesses. If you want to access cheap loans through government banking system, then so creating incentives for that would encourage formalization. And the other thing, I think also a narrative change, because the idea, again, I think Catherine did speak on this, even also Vanessa, that informal sector needs to be broken down further, because when we say informal sector does not pay tax, it's not entirely true. With the high level of consumption taxes that we have been discussing here, 66% of total income coming in from the informal sector means that the informal sector per se is actually contributing to tax. We're only talking about the direct taxes, and then finding ways of how do we then actually target the different sectors. In the transportation sector, there was an effort in Kenya again to be able to create associations and umbrella bodies for that. You cannot get a vehicle license unless you are associated to an overall umbrella organization, SACCOs as such, which then becomes ways of formalizing. So there are, I think, different ways that this can be done. And lastly, I think the ability to benchmark and try to see what is working in one country that can be benchmarked in the other. I remember there was a case in Sierra Leone again, where in the effort of introducing value added, there was a huge resistance at some point, and there was a kind of negotiation between, I think at that time it was Motorcycle Association of Freetown, I think, where they said, okay, we will enter into some kind of agreement that this formalization would lead to creation of motorcycle sheds. So there's a direct link between the benefits you are getting out of formalization, and try to see how can this kind of experiences be replicated or copied to other countries that are struggling with similar challenges.
Thank you very much. We will open to anyone who has a question. Maybe they could type on chat, or you can simply indicate by lifting up your raise hand option, and then we can allow you to ask any question. So as the members of the audience do that, Vanessa, there is a question that's targeted for you. Is taxation the best tool for redistribution when you are starting from a very unequal place? It's actually in the chat.
Yes, I see it. I mean, there's so much richness in the discussion we've had already. I don't even really know where to start. There's so much that I want to discuss, and I think we could really break down any of these topics that we're discussing. I'm sure we could all sit with each other and talk for days about them. Really fascinating contributions. I want to first really emphasize the point that both Alvin and Catherine really hit on about the need to think about moving beyond these blanket policies or these like very broad conceptions of the informal sector. And I think that that in itself really links to this idea of what role can taxation play in redistribution. And I think we have to start from that idea of making sure that we are thinking about about taxpayers or potential taxpayers in a much more disaggregated way, and understanding not only their own circumstances, whether that's the existing fiscal burdens, whether that's direct or indirect taxes, but also what they're getting in return as well. And I think that also, this idea of redistribution, of course, is not inherently tied to taxation. A state can collect taxes and redistribute nothing and just keep it to itself, right? So I think that the points that have been made, I think, by everyone here today about the importance for accountability and the role that civil society can play in encouraging that accountability is really important. So I think that, Catherine, you were really hitting on the idea of, there is this idea that if you start to pay taxes, then you'll have the sense that you can make greater demands of government. And I think that certainly is the case in many contexts, but we, it also requires some of the civil society support or the organizing support. So I think that it's, something to be considered in this more holistic approach. I really like the example that you gave, Alvin, of the Okada associations in Freetown organizing and actually being able then to negotiate for something in return. So I think that's when we think about the role of civil society, I think it's often actually quite active. I mean, Torben, I know the scan that you're talking about at the civil society organizations engaged in taxation. And it is true that, these more like NGO level civil society organizations are often engaged more in the international tax issues, which again, another issue, another tangent that we could go on, because I think it's also a very important point to raise. But I do think that when we're thinking about civil society more broadly, of thinking about market associations or bike rider associations or other transport sectors, we often do see that they are able to make demands or have some greater political clout, right? So even thinking, there are many places where governments are not just reluctant to tax wealthy people because of the politics, but they're also reluctant to tax well-organized groups in the informal economy, because the wealthy people may be contributing to political campaigns, or there may be some sort of networks and connections. But each of those individuals that are riding bikes in Freetown have a vote, so they have some political power as well. And it's, I think, important to recognize how they can leverage that political power to make the greater link to service provision. I mean, I think that, I always like to kind of take a step back as well in thinking about what is even meant by the fiscal social contract, and is it necessary to pay taxes in order to make demands of government? There's often that assumption, but I think that's, it may be necessary to kind of think about, what does it mean to be a citizen in a place, and do I deserve basic services whether or not my income is high enough to pay income taxes? I think that it can often be problematic to think that people can only make demands of government if they pay income tax. I mean, of course, in practice, those notions are often deeply embedded, but I think it's more deeply linked to some of the power dynamics of who is able to have a voice, and linking again to these ideas of the importance of civil society. So I don't know. I mean, again, there's so much that I want to talk about and dig into, and particularly I really like some of the very practical strategies that have been that have started to be raised about how to actually target people in the informal economy, higher income earners in the informal economy, or the innovative things that the KRA is doing right now. I mean, all of that is interesting for those of us that are not on a beach in Kenya right now. But I think that there's a lot to talk about. I mean, the particular question about redistribution and taxation is an important one. I don't think it's an easy one to answer. Again, I think it is so deeply connected to the political dynamics and the role of civil society and the power of people to actually have their voices heard to ensure that redistribution happens. But I think that there are at least some increasing conversations in different countries on the continent about better linking taxation to service delivery, or at least to social protection, or how to delinking taxation from social protection. The idea that everyone should have social protection whether or not they pay tax as a starting point. Anyways, I'll leave it there for now. I think there's so much more to say, but I'm curious to hear what others have to say.
Thank you. I've received a direct message that's quite interesting here, and is reacting to Catherine's observation about the informality of the informal sector, and saying that there are incentives in remaining informal. One, government doesn't know where you are. And two, even when you pay taxes, corruption is real. So you just pay and then all the money is wasted through corruption. It's an observation that's made here. And I would like to hear your comment, Catherine, or possibly Tobin.
It's true. I mean, I don't know what to say. If the government is not taking away 30% of your income, you're happy. Everyone is happy. I mean, it's very hard to tell somebody, come on board and give me 30% of your income. And in the same breath, the president is telling us that every day we lose, did you say 2 billion?
2 billion, yeah.
2 billion shillings is lost every day. I mean, even the most patriotic people I meet, every time I tell them I'm a tax lawyer, the first thing they ask me is, how can I avoid paying taxes? Because I mean, it's just being stolen. It's being stolen, and I'm not seeing where it's going. I have no answer for you about how to incentivize people to get into the formal sector other than prosecuting them. But that's it's a difficult thing to do. I remember I attended a presentation where I have never been able to find the paper, but the gentleman had a very interesting research that he had done on different revenue authorities in the world, the effort they make, as well as the return that they make from their efforts. And they were showing how, at least for the Kenyan one, they were top in effort and least in return. Like their effort was not yielding much. So now if you add on prosecution and everything, it's unlikely that they're going to get much more, but you could try. I mean, you could try, but I don't know how to incentivize other than reducing corruption, but I will say this, when Kibaki came into power, something interesting happened. Because people were seeing some level of development, and the development was sort of distributed. Sorry, Tobin and Vanessa, Kibaki was our third president. Yes, third president. He came into power in 2002. 2002, yes. 1, 2.
Okay,
yes.
Thank you. We have one general question that we are answering. I can see Vanessa guys are saying, keep those documents coming. We actually have a question that, and they're helping me because the question was, what new tools, research, and initiatives are being developed to inform better policies? So I believe that you are quickly answering that in the chat, and so we don't have to discuss over it on the initiatives. But away from that, and I'll direct this to Toban, with regard to specific things that governments can do to attract capital, and mostly to enhance or to provide incentives for the small businesses to thrive, especially using the taxation tool. Any case studies that can cross your mind almost immediately? Support for small businesses through taxation without necessarily telling them you won't pay.
So just to clarify, Professor Amos, this is about basically trying to incentivize small businesses to formalize in one way or the other with the hope of them paying some tax.
Yes.
Okay. Yeah, I think there's and I'll go back to this one case study that is basically a comprehensive set of, I think, 6 research studies across the globe in 6 very different contexts that looks at very different sets of services that are offered, where there's, I think, two types of incentives that are provided. One is a pure information about the existence of those services, and then there's a second point around reducing transaction costs for businesses to formalize. So oftentimes that goes in line with sort of some registration processes, so on and so forth. So there's different types of measures that are taken to reduce those transaction costs for those businesses. And then the researchers across those 6 studies, and again, this is the Metaketa initiative, and maybe while I speak, Vanessa, I'm sure you have the link ready as well. Basically, they coordinate their studies and sort of put together this meta-analysis that looks at these the findings from these 6 different contexts holistically. And what they found is basically that a typical economist research answer, it depends a lot. It depends a lot on the respective design of the services that are advertised or that transaction costs are reduced for. Some of those are very relevant, right? They're around providing, let's say, access to, I think water was one, like running water. So that was like something that was fairly highly valued, while there were other services that may not have like exactly met the needs of the respective sort of target group of small, medium enterprises in that context. So the type of service matters. And then I think what the study also finds is that even though the services matter, none of the services actually led to increases in tax revenue, right? So that's basically, again, this question around, yes, there's this first piece around receiving better access to services that might then, the hope is sort of something like increase productivity in the longer term through, as Alvin said, access to government contracts, but just also like general increases to increased access to capital, for example. So that puts for investments and so on. So that's something that we're not seeing necessarily. And then the second piece also that was hypothesized is that there's higher increases in tax revenue, and that again is something that we're not seeing necessarily. So the question here then is what's next, what to do? And I think there is some interesting thinking now around a component I think that we have touched implicitly on in this conversation, so I'll just bring that in explicitly as well, which is around trust, right? So this is around, if I see that I pay taxes, but nothing really changes, and a lot of that money is diverted, then I don't have really any trust in the local authorities. So I think that's one, and that's really important. And I think it goes, again, we could like split that out into the many different dimensions of trust that are required sort of on both ends for there to be an increase in the voluntary compliance for these tax obligations, right? So this is ultimately this very ambitious goal of everybody is agreeing and voluntarily contributing their fair share. And that's, I think, is a big question, and I think it has to be thought across the different levels. And I think a promising area of intervention really is the local level, because that's where the link between the taxpayer and the authority is the closest, right? That's sort of where I have interactions. I don't talk to the Minister of Finance on a regular basis, right? So I think that is really sort of where there is a lot of promise, and maybe that's something that we could also dive into a little bit deeper.
Thank you very much. Now, I want to pose this, the informal sector. Generally, you find that these are people in this huge population. Most of them have a phobia for formality. And along the way, one of the most difficult issues is for government to locate and collect the tax. Of course, speaking from the economics perspective, you would be looking at cost efficiency, the cost of collecting the tax versus exactly how much you collect. So sometimes, and this is thinking wildly, the tax guys would sit back and say, it's not worth it. I will spend 1 billion to collect 500 million. So is it really worth it? So the question would be, from economic perspective, what can government do to enhance cost efficiency within the perspective of tax collection? And I have in mind again the informal sector. These guys, yes, we know they are within a certain percentages. You may not even know who exactly these guys are. Those who are truly informal, not those that Catherine is saying are not truly informal. So Vanessa, any ideas?
Yeah, no, I mean, it's a really good question and a really excellent point about the revenue efficiency. And I think that the wide variety of studies that have happened on formalization, including the ones that Torben was discussing, all find that in fact it doesn't increase revenue. Never mind questions of accountability and service provision and fairness. In fact, the cost of actually going out and trying to register businesses doesn't lead to greater revenues. In fact, one of the things that I'm working on in Freetown right now is an evaluation of a registration drive that's happening across the city. And I mean, I don't have the findings from it yet, but I can tell you for free today that the revenues are not going to be overwhelming from this exercise. Not only is it difficult to actually, as you say, to actually go out and identify the businesses, the targeting of it again is, you know, as we've all drawn attention to today, the targeting is often problematic in that it's focusing on smaller operators. Those higher income operators are often more difficult to locate. The second problem that follows is that even when businesses are registered, even if they are formally registered, it doesn't mean that they're actually going to pay taxes. So then not only does, even in the registration process right now in Freetown, there are multiple levels of registration that have to happen. So even though now the Revenue Authority has been successful in expanding the number of registered taxpayers in the city, those taxpayers still don't have national tax identification numbers, and they still haven't registered with the Business Registration Authority. And they need to do all of those things before they actually submit their taxes. So then you have three different agencies in this context that are having to follow up individually with each taxpayer to ensure that they're registering across the different agencies. But then, you know, even then, when it comes to pay the tax time, there's no guarantee that those people will actually follow through, or that they will, you know, for smaller businesses, it's often tax payment is often done on a self-assessment rate, a self-assessment approach. So there's no guarantee that people will actually be accurately reporting their revenue. So I think, I mean, again, just to kind of, not to just keep beating the same drum, but I really think it's more important to target efforts of the administration if we're thinking about the informal sector, rather than doing these blanket registration drives of trying to locate every business in the city of Freetown. Being a bit more strategic about it and thinking, for instance, of, you know, going back to the idea of taxing professionals in particular. So I shared one paper in the chat from, I believe it's in Nairobi. I don't know if it's more broadly in Kenya, but of how to actually identify, for instance, accountants or lawyers or dentists that are operating and who are then in the informal economy because they're not registered and they're not paying taxes. So how can we target efforts specifically on that? And when you're thinking about the revenue administrators, rather than actually going out into the streets, which is a lot of work, actually doing it in a much more targeted way can be a lot more efficient. Now, besides that, I think that there are actually a lot of tools that already exist for revenue authorities to collect tax in a more efficient way. I think a lot of the times there is some inclination to want to introduce new taxes or to change tax policy rather than focusing on actually administrative changes or directing administrative attention to actually implement policies that already exist. Oftentimes, even when the policies are on the books, they're not actually implemented completely. So rather than trying to do, it's almost like trying to do too much at once, really focus on doing what you have access to now well. That can be in trying to identify those higher income earners in the informal economy or high net worth individuals more generally. And, you know, as Alvin was discussing earlier, there are a range of strategies that we know of how to, you know, identify high net worth individuals by looking at things like assets or going to what Torben was saying about focusing on property taxation. It has been widely shown to be a really effective way to target, if not high net worth individuals, but at least wealthier parts of the population in a way that from a cost benefit analysis, which of course is at the end of the day central, needs to be taken into consideration.
Thank you. Thank you for the elaborate response. I know it's always a controversial issue and a policy issue. Do you really want to do it? Now, the next one, still very closely related to that, touches on the complexity of the tax system for comprehension by those in the informal sector, especially. The tax system, and I said this again, drawing, for example, a case from Kenya and even Uganda, where we have got all these taxes, and in order to make it easier, government says, okay, just pay 10% of the turnover or just pay 10% of what you collect. Don't worry about what your costs are. So looking at that becomes regressive in the sense that you are taxing at the top line instead of taxing at the bottom line in an effort to make it simpler. And in the process, ending up disadvantaging the small businesses that need every coin that they make from the revenue. So maybe, and this could be directed to Catherine in your experience, or even Alvin, from your experiences. First, how simple you've been dealing with these entrepreneurs all the time. How simple is the tax system for them to be able to comprehend, understand, and calculate and pay the right taxes? And okay, maybe I'll come to the next one, but it touches on what then can be done to ensure that it's as simple, because people will comply with what is they understand.
So let me go first, Catherine, with your permission. I think that the question of complexity sometimes is overstated. And the example we usually give is in Kenya here, there's no village you can go without finding an M-Pesa operator. Or there's no deepest in the village where there's no electricity and there's nothing, you'll still find a Tusker, a beer. So Tusker, with the largest brewery in the country, with the little resources that they have managed to penetrate and reach and get their products to the most, like, if you consider the question of complexity. So I think that the same thing, and building up on the point that that Catherine was making, I think the question of part of that, I think, is linked to the 2 points. One is, if you are registering people purely from a tax perspective, you will always be playing cat and mouse. If that's the only motivation that you're encouraging, incentivizing, you'll always be playing cat and mouse. If you look at the tools that particularly the private sector corporates have employed to reach out to constituencies, be it in the banking sector, be it in the mobile money sector, be it if you want to register for a mobile phone, there are simple documents that you need to provide, then you are connected. And I think this is really the more comprehensive view that we need to look at state capacity, number one, in terms of you register for marriage, you register for birth, you register for NHIF, which is the National Health Insurance, you register for the NSSF, the Social Security, there are multiple registrations that are serving different but interconnected services. And I think harnessing that and not having this kind of piecemeal, different forms of registration. Yes, one might be for tax purposes, but I think having a more comprehensive view on the purpose of registering individuals and registering businesses, I think, would be a starting point. That's the first. And I think the second really is there's no way of disconnecting the point of tax collection and tax expenditure. Like, the money is being collected and for what purposes. And I think it's not only that, is making it more apparent, more explicit. Of course, the limitations of the size of the economy, if you look at the tax to GDP in our countries, even if we were collecting at the optimum, the revenues vis-a-vis the need will never be enough. Even if we sealed all the loopholes and there was zero leakages and all the money that was being collected, still the need surpasses the available resources. It is more, I think, part of including in the part of tax education is really making that explicit connection. And I think Catherine mentioned the past president Kibaki, where part of his campaign was that we will be providing free primary education out of the money we collect as tax. That simple political framing, I think, can some way contribute to creating that nexus between we are paying taxes and we're able to see the services. We might not be getting the best services out of it, but we are at least trying to see the sense of where that money is going. In Kenya here, and sorry, we keep citing Kenyan experience and Kenyan examples, but there is a general perception about what you call mali ya umma, which is what you call public goods or public property, and public property is nobody's responsibility. So it's something that you can waste, it's something that if it's public property. So challenging those kinds of norms and creating, I was talking about the social contract, I think would go a long way in terms of encouraging, avoiding this kind of catch up or cat and mouse games that many a times is the driving force behind kind of the effort to broaden the tax base or to bring more people in the tax net, and turning that conversation on its head and saying, okay, you are actually a taxpayer already, and this is what those taxes are. Those taxes are paying, and that's making that part of the more broader tax education that needs to start not just from the top, but also from below.
Thank you, Catherine. Anything to add on that? Complexity and simplicity?
I do think that our tax system is quite complex. I've seen quite a number of African countries. What they have done is that they have come up with what you were talking about, a presumptive tax that says you'll pay this %. But what many of the other African countries have done is they say that if your revenue is this much to this much, they give you a specific amount of money to pay. So they'll say maybe if your revenue is up to say 500,000, then you pay 10,000 shillings. If your revenue is up to this much, then you pay this %. Then past a certain level, that's when they introduce a percentage. Now, the reason why they introducing such a presumptive tax, of course, would simplify the whole compliance process for the small and middle, especially the small ones. There's a class I taught, I remember, there's a class I normally teach at Strathmore for small and medium entrepreneurs. And one of the questions that they asked after we had gone through half of the class on what you need to do to comply, one of them looked at me and asked, okay, so now that we've already messed up, can we just ban our offices and start from scratch? Because they realize the complexity, they realize how much they have not been doing, they realize all the ways in which they have been messing up, and the immediate reaction is to panic. So in that sense, I do think that it is overly complicated because there are so many things that you need to file at different times at the end of the month. And the Revenue Authority, as what Alvin was saying, they have not simplified it. We have very many technological advancements in Kenya which have simplified life, like M-Pesa truly has simplified life. If KRA could tap into a system that is that simple, that someone can do it on their phone, then it might simplify. I don't know whether or not simplification will actually help with compliance, but it is worth an effort rather than trying to tell somebody who is running a small shop to try and figure out all these complex issues about whether or not they can carry forward their losses. Should they file NSSF? Should they file NEET? Like there's so many things that they need to file. And at one point or another, you will fail to do something. And the penalties are so high. So people panic. And after that, they truly go underground and they stop complying completely. So if you could simplify it and tell somebody, just pay this. I know the turnover tax was supposed to do that, but the turnover tax, it was a percentage. So I feel that might be part of the problem. So if you told somebody, I think they tried to do that with, when they tied it to getting your license fee from the city council, they said that if your license fee is 10,000 shillings, then you pay us a percentage of that. But then there was a fight with the counties because the counties did not want to give their money to the central government and what have you. But I think that might have helped because more people do pay their license fees as compared to their taxes.
Yeah, but then that raises the question of the base. What exactly should you base the tax on? Because the issue you are saying of the mere fact that a person is buying or is paying for their annual licenses to do business, should that be the foundation on which tax is charged? Or should the foundation on which tax is charged be the revenue? Or should it be the line?
That's a
how
good question.
difficult is it for these people to determine their own financial matrices to be able to determine the appropriate taxes?
It's a good question, but I mean, a lot of them will never really tell the government what their real revenue is. They will normally lie about it. So this was more, though I feel it was more of a trap. They wanted people to pay the reduced taxes, and then once they're in, they come down with a hammer. Yeah, but the county governments did not cooperate with that.
Okay, thank you very much. And now I think I want to, it's been a good afternoon of discussions, question answers here. And the audience, again, in case someone has a question, we are, this is your time. We only have quite a short time remaining before we close. So you could ask any question or you could type on chat. And as we do this, the room has quite a number of researchers. And I would now be interested in hearing from the panelists, possibly Tobin and Vanessa, especially on what kind of the research direction that all this is taking, and the kind of interventions that someone seated in here and thinking, I need to devise my next paper based on this. What kind of interventions should they be looking at testing? Anyone can go, Toban or Vanessa.
I mean, I know that Vanessa has a whole research agenda lined up on this, so I just like take a couple of shots, and then Vanessa, you can fill in all the many holes that I'm leaving here. But no, I mean, there's a couple of different points of view. I think there is a lot that sort of needs to go into really sort of like just defining, you know, these different terms that we have talked about today, right? So there's a lot about defining different segments in the informal sector, and then sort of thinking about particular interventions that could be addressed to identify those that seem most promising, right? So that's sort of, I think, one area. And I think the second point then is around I'm looking mostly at the domestic level here again, right? So there's lots of research that is happening, I think, in all of the areas that we talked about today. I think one agenda that I really see is sort of this linking of, or when I say said linking, delinking of service provision and the financing of those through taxation, whether that is through my own tax contribution or others, right? So basically creating, or like trying to understand first, I think, what awareness is there, how can that be built through very different, potentially unconventional collaborations between civil society, the revenue authority, that might oftentimes be on different sides. Here there might actually be opportunities for those important actors to be on the same side. Sort of, you know, what interventions can we think about and how could those work? I think that there is some examples. I think Seatini in Uganda, they're doing great work, sort of like on both highlighting on the grassroots level, sort of, hey, this is sort of the tax burden that we have through all of these indirect taxes, but then also sort of trying to work up all the way to the revenue authority to coordinate. So I think that is a couple of ideas. I think there is now, you know, from the IDinsight perspective, a lot of value for data and evidence to be played in the administration process, in sort of facilitating different ways of enforcement, right? Alban, you mentioned KRAs now looking at Instagram posts. That's a great way, right? There's many such interventions, thinking again about property tax. That's sort of one thing that I want to be pushing here, about using georeference data for that, automating a lot of these processes to like provide updated cadastres of sort of what properties are there, and then thinking about the best and most equitable ways of defining property rates based on those. So obviously that also needs to be housed in the specific context, in the legislative environment, so on and so forth. But there's lots of opportunities for innovations in data, in evidence that can be leveraged for the better here. And I think that interventions are, yeah, plenty. So maybe let me just stop there. Vanessa, I'm sure you have millions.
I mean, that's a great place to start, Torben. I think I have too many ideas for where research should go, so this might not be as coherent as you'd like. I've put in a couple links in the chat for some of the open research calls for proposals that we have at the ICTD that kind of narrow down how we're thinking about these issues or the types of research that we think are most important. Now, focusing on, for instance, taxation of the informal economy, I think one of the key remaining questions, which we've kind of been dancing around in this conversation today, is how to actually identify and better target higher income earners in the informal economy. So as I had noted, there has been some work in Nairobi on thinking about how to target professionals in particular, but research in this area is really limited. A lot of the research on the informal economy, on the informal sector, on formalization has been of kind of these blanket policy interventions. So I think there is still quite a bit of work to do to think about very practically how do revenue administrations, how can they better identify those higher income earners in order to ensure that policies are better targeted. So I think that fundamentally kind of approaching any of the interventions around research on the informal economy or on formalization needs to be grounded in an understanding of equity and accountability. I think some of the interesting points that Torben had raised earlier about the effects of providing certain services to the informal economy and what is effective and what isn't. I think that is a useful way to approach it, thinking about the ideas around fiscal reciprocity and taxation of the informal economy. I think there's still a lot more that we can learn there. And again, kind of going to, I think Alvin was talking about what informal operators can expect in return for tax payments. And it's often not, when perhaps I think about services, it's things like schools and hospitals, but oftentimes for informal operators, it's things like loans, business loans, or access to government contracts. Now, of course, in practice, providing those types of business-oriented services can be really problematic from a government perspective. I know in the context of Sierra Leone, for example, it is certainly the case that informal operators are incentivized to formalize when formalization is required to receive government contracts. But as soon as their contract ends, then they return to the informal sector. It doesn't actually encourage the more sustainable tax-paying culture. So I'll leave some of those ideas there for the informal economy. But I think the other things that we have been talking about today has been really linked to thinking about how to make tax systems fairer, more equitable, and what role civil society can play in that. And here I think there's a lot of open research questions about, for one, taxpayer engagement and education. There's oftentimes revenue authorities engage in these sensitization efforts, these taxpayer education efforts, but there's been really little evaluation of how effective those are. And at least some of the early evidence based on some of the qualitative research I've done in various places shows that those efforts aren't actually very effective because they don't tie into the key elements of trust. They don't make people feel that the government is more trustworthy. It's oftentimes just providing information. So I think that there are opportunities to do some evaluations, for instance, of different types of taxpayer engagement and education strategies. Mm-hmm. Things like, for instance, working with local leaders in any area, working with civil society actors, partnering with revenue authorities to actually engage with citizens. And the research that we've done, which I'll share a link in the chat, has shown also that there's a great desire for on the part of taxpayers to have more interactive forums, to not just have information be given to them, to not just receive an SMS about the tax deadline, but to actually be able to ask questions, or to have a platform to actually make demands as well, or to raise complaints that people have. So I think that there are one promising area for study then I think is around taxpayer education. I think that's more broadly thinking about the role of civil society. One of the areas that we've been talking about today is, less about the role of NGOs and some of the great work that organizations like TGN are doing across the continent, but really focusing down on very local organizations like business associations or market associations, and thinking about what role those types of associations can play in encouraging taxation and encouraging greater accountability. And linked to that as well, I think that one key question in my head as well is about the role that associations of professionals can play. So linking back to the idea of how to tax professionals in the informal economy, it may be that there's possibilities for greater engagement with certification bodies of accountants or lawyers or whatever it is in any country. But these things I think are really understudied. So there's ample opportunity for sure.
Thank you very much. We are now coming to the end of our session today. I don't see any specific question from the audience. Any other question from the audience? So I'll ask for a parting shot, maybe beginning with Alvin, then we come to Catherine, Tobin, then we finish with Vanessa. Alvin, the parting shot. What do we conclude today?
Yeah, two things for me really. I think that really the whole conversation should be centered around the question of tax compliance or willingness to pay tax, because and this is linked to how citizens themselves view taxation, and that I believe can be changed from a negative to a positive view towards taxation more generally, particularly building up on the point that Vanessa was making about engagement, about involvement of citizens, not just receiving information, but creating forums where there's a direct engagement with the citizens on the design of tax policy and on the implementation of tax policy. And I think that engagement can significantly contribute to a more positive view towards taxation and ultimately contribute to increased tax compliance and willingness to pay tax. That's the first. And the second really is what I also emphasized, that we cannot achieve domestic tax equity if it is removed from the broader context of the global, beyond the national borders. Because if the rich are finding their ways of moving their wealth, moving their finances, moving their resources out of the national borders, then you are caught up in this kind of very narrow conversation of how do we then tax the informal sector removed from, and that can contribute to even the tax resistance that we see. If the rich are not paying, why should I be contributing to paying taxes? Those, I think, will be for me the two takeaways I would like to emphasize in this call.
Thank you, Alvin, for the two takeaways regarding willingness to pay tax and getting persuasion incentives to enhance the payment of taxes, and then, of course, looking at it from the national, regional, and global perspective. Thank you, Alvin. Catherine?
I have to agree with Alvin with most of what he has said. I think one of the things that we really ought to study is why the many efforts that have been put in place by the different governments have failed to tax, say, the informal sector or to tax the wealthy, because they have failed. And so rather than keep piling on more and more new taxes to tax the area, we might need to look at why have these ones so far failed? Why haven't they achieved what they ought to have achieved? That way we can be able to, go forward with a more informed point of view. And as Vanessa said, it would be interesting to see whether or not the different licensing bodies would be willing to help with compliance. I know they did it in the informal sector. I think it was in Ghana for their transport sector. I think they had associations, and it worked for a while until the associations became corrupt as well. Then it failed. But it would be interesting to see whether or not it could be replicated here, especially for the professional, at the professional level, and also even at the transport level in Kenya, because the transport level is very organized in terms of the associations, the different circles. So it might be interesting to see whether or not that would be applied and whether or not it could work. Yeah, but it's an interesting area. I hope there'll be more research on it. I think there was a paper by ETAF by the African Tax Administration Forum on it. You can look at the measures that they were recommending on that.
Okay, thank you, Catherine. I think I like that first question. Why are the many efforts failing? and possibly that should be a soul searching at the beginning, in fact, to look at, even as we review the different areas for research, to understand what are the loopholes in what is already there. Okay, thank you. Parting shot from Tobin.
Yeah, sure. Thank you so much. Maybe just directly sort of depending on Catherine's point around why have so many measures failed. So I would argue for like a very taxpayer, human-centered approach to understanding that. Understanding that we're dealing with humans that are driven by incentives that we need to understand. Sort of service delivery is a key point. We mentioned many others, information, education, there's this point around trust. All of those sort of are in interplay with each other and differ by context, differ by the institutional arrangement, and are very, very key for understanding this question and then being able to design a better strategy towards that. So I think that's one sort of, I think, takeaway in terms of like how to approach answering this question. And then I think the second point that I would mention is, again, maybe from an organizational point of view, the huge potential for innovation by leveraging data and evidence in that space to really sort of like advance this agenda in ways that we currently have not thought about. Going all the way from sort of again through the idea of like targeting different segments in the informal sector, targeting readdressing the way we think about property taxation, all contributing sort of with that lens of equity, and ultimately also then improved revenue collection to finance services. So for that,
thank you. I take the 2 points regarding the foundation for trust and the institutional arrangements, and I particularly like the last point with regard to the issue of this potential for innovation, coming up with innovative approaches to the aspects of informal taxation, and possibly that also links to what Catherine was saying, the disaggregation of data, so that you are saying who exactly is who and what kind of potential do they have to be able to pay the taxes. Vanessa, parting shot, please.
Sure, thank you. I mean, I've already said a lot, so I don't think I will say too much more, and at the risk as well of just repeating what everyone else has already said, which I think, again, just to highlight the fantastic discussion we've had today. I mean, I think, Catherine, exactly what you said of trying to identify, what the reasons for why things have failed or why things have not gone as well as we would assume they would just by looking at it on paper. And, Torben, I think you're right, focusing on individual approaches, understanding incentives, but at the same time, as a political science, I have to say that, making sure that we understand those individual incentives as being embedded within political, economic, and social institutions. So having some balance in the individual incentives and institutions was just, not dissimilar to what you were saying at all. And likewise, fully agree that there's lots of opportunity now to think about how data can be better leveraged, whether we're thinking about the use of GIS and satellite data in identifying properties for property taxation, or in using innovative methods to identify assets of high income earners in any country. I think there is, we kind of have a wealth of data right now, and I think it's just a matter of figuring out how to use that most effectively, which, hopefully some of the evidence-based research that we're all doing can help support some of those efforts.
Thank you. I think the takeaway is well taken, especially the leveraging on existing technology. We've used technology in many other areas. Why not try it in ensuring that for tax purposes, we are also using it effectively. So with that, I think we'll come to the close of this session. I really thank all the panelists, the attendees who've been listening, those who sent their questions and requested that we answer the questions and then we send to them the recording. We really appreciate. I'll now forward it, take it back to Anne, Anne to do her closing remarks as we move on. Thank you.
Thank you, Prof. Thank you, Professor Njuguna, for moderating our session today. And a huge thank you to our speakers, Vanessa, Tobin, Catherine, and Alvin, and Lauren for sure. I mean, we do have a lot to do in terms of what our governments can actually do in terms of ensuring that they achieve the development agendas, while ensuring equity in taxation. And I like how our panelists today have articulated the topic today, and just tying it to what NIERA and IDinsight is committed to doing, that is advancing evidence-based research and ensuring that it's uptaken in policy decisions and development programming. So thank you once again for joining us today. I would like to invite you all to, and especially for our participants, to follow us on our social media platforms. For IDinsight on Twitter, that is IDinsight, and for NIERA, we are at NIERA_EA, and our websites as well. I should post that in a few seconds on the chat box, just to keep you updated on the programs or other events that we have in the future on related topics or other topics for sure. So thank you very much for joining us today and for the great insights from our speakers today as well. Thank you.
Thank you, thank you, thank you, thank you. Looking forward to it.
Thank you. Hope to see you all sometime soon.
Sure.
Same. Bye.